please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good morning. Welcome to Power Breakfast. Well, the festivities continue. A very happy Deepavali to all our viewers. And in fact, it's going to be quite an interesting trading session ahead of that crucial moderate trading day. A bit of a challenge, Anisha, early this morning because we have a couple of disappointments coming in. Wipro, I think, was a bit of a disappointment. And Axis Bank, that's going to be a challenge for the Nifty today.
But let's not dampen the mood, Nigel. Wipro was pretty much in line with expectations. Yes, a bit of weak on the expectations, but I think the market has a bigger cue. The mood of trading tomorrow and the festivities have begun on a good note, at least for the bulls. First up, let's run you through the top stories at this the hour then. Fireworks on Wall Street. Dow Jones crosses the 23,000 mark for the first time ever, thanks to the strong earnings from blue chips. Caution prevails in Asia ahead of Xi Jinping's speech to China's Communist Party Congress.
And Axis Bank reports a sharp rise in its bad loans. The non-watch list slippages more than double due to divergence lists from RBI. Slippages in the second quarter crossed 8,900 crore rupees.
Weak show from country's third largest software firm Wipro. Constant currency growth at 0.3%. Revenues miss estimates marginally, and third quarter guidance disappoints the street.
And also watch out for Ultratech's earnings that are scheduled later today. Volume growth is likely to be driven by the JP Cement acquisition, though higher interest costs and depreciation will dent its profitability. Well, Asian markets are more or less mixed in early morning trade. We had the Nikkei that's holding mildly in the green, so that market should be up for you on the screen. However, the Kospi is under some pressure in today's trade. The last time I checked, it had moved into the red, so let's pull up the Kospi as well. There are some signs of nervousness. Remember, China's Party Congress will be looking at signs for future policy direction in the world's second largest economy. So that's going to be quite important. We'll be waiting out for commentary that'll be coming in from China. The Taiwanese index, though, for starters, has opened up well in the growth. Remember, the Singapore and Malaysian markets, both of them are shut for a public holiday. So we are working with the SGX Nifty, and it seems definitely the SGX Nifty is factoring in some pressure coming in on the Nifty Bank owing to the disappointment that we saw on Axis Bank. But China's Communist Party kicks off its twice-a-decade meeting that may signal if Xi will appoint a successor to rule after 2022. China's most important political event brings together the 2,300 party members. CNBC's Martin Song gets us all those details.
What is going on here at the 19th Chinese Communist Party Congress is Xi is going to be consolidating power even further. We've talked about the pyramid structure of the Chinese Communist Party. What I want to do now is run you through the formal process and the sequencing of how he is going to consolidate that power. So today, of course, is a big day, the start of the Congress, but it is not the only day. Coming up in about a week's time, on the 24th of this month, we're going to get the new Central Committee elected. This is 205 people. More than half of them are getting replaced. The next day, October the 25th, the Central Committee elects the Politburo, which in turn elects the Politburo Standing Committee. This is the apex, the top of the pyramid. 7 people, 5 of the 7 are expected to be replaced today. Xi Jinping obviously is going to remain part of that 7. But the question is who the new members might be, whether, let's say, his hatchet man, Wang Qishan, head of the whole corruption crackdown, whether he is going to be remaining in that Politburo Standing Committee, whether or not they're going to waive that 68-year-old informal age limit there and allow him to remain on. That's going to be one key thing to watch. After that, the question is who the macro team is going to be for the economy in China, who the vice premiers are going to be, who the cabinet members are going to be, and probably most crucially, who the head of the PBOC, China Central Bank, the People's Bank of China, is going to be, whether or not Zhou Xiaochuan gets replaced. So that's something we'll be watching very closely as well.
And on Wall Street, the Dow Jones broke above 23,000 mark for the first time on an intraday basis and closed 3 points shy of that milestone mark. The S&P 500 ended at record high, while the Nasdaq Composite edged lower by less than half a point. CNBC's Hampton Pearson gets us a wrap of all the action on Wall Street.
It was really, frankly, kind of a mixed bag on Tuesday on Wall Street. Frankly, what we had happen was two of the major indexes reaching new records, including, as you mentioned, the Dow topping 23,000 for the first time before falling back. Industrial companies and banks slid at the closing bell. The final numbers, the Dow climbing 40 points, the S&P up 1, the Nasdaq down less than a point. Big names in the news overall. Netflix sank 1.4% as investors worried about its mounting spending on programming. Healthcare companies rose. United Health Group, the country's biggest health insurer, jumping 5.5% after reporting a stronger quarter. Johnson & Johnson up 1.2% after reporting a strong quarter of its own. Boeing falling 0.4% after the rival aircraft maker Airbus took a majority of the stake in the Bombardier C-Series passenger jets. Saw losses in financials with earnings beat from Goldman Sachs failing to cheer investors. Goldman Sachs falling 2.6% at the close, and it weighed down the most on the Dow. Morgan Stanley rose 1.66% during the trading day before closing up about 0.4%. Both banks reporting third quarter profit that beat estimates. Continuing weakness in trading revenue, however, a negative. The dollar and the U.S. Treasury yields took comfort from news that the U.S. President Donald Trump might pick Stanford University economist John Taylor to lead the Federal Reserve after Janet Yellen's term ends next year. The former Fed board member is seen as more hawkish than Yellen, and other names being considered to take over the central bank.
All right, then the big question is, will this record rally on Wall Street sustain? Let's hear out some global market opinion.
You know, what we're in right now is this sort of euphoria around stocks that's been missing for this entire bull market. People are starting to buy the dream that stocks can go up, and you're starting to see a broader market. Leverage ratios for the S&P 500 are now at cycle highs. Companies are starting to slow down their buyback programs. So a lot of the drivers for this bull market, like levering up balance sheets and doing buybacks, those are slowing down and kind of maxing out. If you look at earnings season for the last couple of quarters, there has been no reward for earnings beats, which is a little bit weird, right? So you would imagine that stocks that surprise to the upside on earnings go up after they announce. This quarter and last quarter, nothing's happening. In fact, stocks are slightly underperforming when they announce really good results.
And trade ministers from the United States, Mexico and Canada agreed to extend talks on the North American Free Trade Agreement renegotiation into the first quarter of 2018. Now, Canada and Mexico had rejected what they see as hardline U.S. proposals. The talks had been scheduled to conclude this year, but the three sides remain far apart on key issues.
Well, it doesn't sound like we'll have to wait much longer to find out who the next chair of the Federal Reserve will be. President Donald Trump plans to announce his pick before the trip to Asia next month. We also now know that he's working with a short list of 5 names to lead the central bank. Former Fed Governor Kevin Warsh, Stanford University economist John Taylor, current Fed Governor Jerome Powell, and in fact, National Economic Council Director Gary Cohn, and the current chair, Janet Yellen. He's interviewed some of these candidates already and plans to talk to Yellen on Thursday. Okay, coming back to the markets then, and let's take a quick check on how those European markets they closed. Well, they closed more or less flattish to mildly negative. Investors were there, they monitored the key political developments in the Eurozone. Now, British Prime Minister Theresa May met the leading EU officials in Brussels, and both sides called for the pace of Brexit negotiations to be accelerated. On the data front then, Britain's inflation rate soared to a fresh 5.5-year high in September. So that was some data points that we got in from those European markets. But we need to pull up some of those emerging markets. Yesterday wasn't a very good day for those markets because they were down, with a cut of closer around 1%. But if we're looking out for green, I think we got some green coming in the Spanish index yesterday. It was trading in the green for majority of the trading session. Remember the previous trade, it did take a bit of a knock. Yesterday, there was green on the screen on the Spanish index.
Okay, let's shift focus then to the currency space. The dollar is steady after rising to its highest level in a week overnight as markets speculated over President Donald Trump's choice of a candidate to succeed Janet Yellen as Federal Reserve Chair. However, the US currency remains largely unchanged against the yen ahead of Japan's election on Sunday.
And the world of commodities then, oil prices strengthened after a choppy session on Tuesday. Investor worries over supply due to geopolitical tensions in Iraq were offset by expectations of higher US oil exports. And as we speak, Brent crude prices holding at around that $58.50 per barrel.
And from the precious metal space, gold prices fall to one-week low on speculation that the eventual successor to US Federal Reserve Chair Janet Yellen will favor higher interest rates.
Well, time for a short break. Then on the other side, we'll get you all the cues and news that need to track when we open up for trade in the next couple of hours.
Well, welcome back. You're watching Power Breakfast on CNBC TV18. Back home on Dalal Street, the markets took a breather and ended flat but with a positive bias. The Nifty witnessed wild swings in a 40-point range to end with a 4-point gain. The Sensex ended 25 points in the red amongst the broader markets as well. The mid-caps outperformed. The index ended with gains of around 100 points. The Bank Nifty, however, underperformed with 0.25% loss. But how are the cues stacked up for Choti Diwali today? Will it be festive cheer or a bit of dampener coming in? Naveen joins us now to tell us more. Good morning, Naveen.
Good morning and happy Diwali, Anisha. As you pointed out, for Choti Diwali. So now beginning with the SGX Nifty, remember they are indicating a mild red in our Indian markets. Also remember that Dow Jones, they have hit a record high and ended shade below the 23,000, the historical mark. Now more importantly, yesterday, as you clearly pointed out, yeah, we ended in the green. Also remember, this is a 4-day winning streak with a total uptick of almost what, 250 points. And also we have seen ended in the green. Also remember, this is a 4-day winning streak with a total uptick of almost what, 250 points. And also we have seen a bit of a consolidation yesterday and resistance at the 10,250 level. Remember, that will be an important mark to watch out for going ahead. But more importantly, during the markets, we saw two good results, Axis Bank as well as ACC. That bode well with the overall sentiment. But post-market, that was where there was a bit of a dampener both by Axis Bank as well as Wipro. And both posted weak numbers. And I expect Axis today to have a rub-off on the overall Bank Nifty itself. I'm talking about the levels on the back of this, 10,200 call. There we saw maximum open interest and the premium is around 90 rupees. So expect some resistance from the 10,250 level to 10,290 level. On the other hand, the support that seems to be a bit distant at around a 20-day moving average. And even if you see the open interest opening after around 10,000 put over there, the premium is around 17 rupees. So around that 9,980 levels, that is where the other support is to be found. Institutional flows, if I were to say, same, the pattern continues. But remember now the FII sell, the average has been slowly coming down. So on a net basis, institutionals have bought close to 400 crore. So that comes in as a big positive. But I believe there will be some bit of a vulnerability. Why? Because the PCR, that is at a multi-year high of close to 1.7 times. So over there, some bit of vulnerability is to be shown. And the other key point to note is that the Nifty futures premium, that has contracted from what, 25 points has come down to almost 19 points. So this will also be one key point that we'll be watching throughout the day. Remember, I expect markets to start in red today, but going ahead, how will they pan out? That is one key thing to watch. Anecdotally, we have seen markets shrugging off and moving ahead. Will that happen? Will we be able to break 10,250? These are the two key things which I'll be watching on.
All right, valid point then, Naveen. You know, Axis Bank, I think the whisper numbers that it's going to be weak. So let's see what happens after it opens a bit lower. But few more stocks we'll be tracking.
Purely on the basis of the results that they have posted. I'll begin with the big boys first. Remember, Wipro posted its numbers post-market. Anisha has been analyzing it number throughout, and we understand that those will be weak numbers. And yeah, the ADR also suggests the same thing. So on a Q-on-Q basis, marginally weaker, and the guidance that has also come in at around close to 0 to 2% growth. So that won't be taken that cheerfully by markets. On Axis Bank, what we understand is that the asset quality that has been deteriorating significantly, and that has had a bearing on the overall stock also in today. day's trade. The other smaller companies that posted their result, the likes of Nuclear Software, that was actually a steady set of numbers. If you see relatively on a quarter-on-quarter basis for the last 3 to 4 quarters, the company hasn't been doing well on the margins as well as revenue front. This time they posted 7% uptick on a QOQ basis. Thumbs up from my side. On the other hand, Tata Sponge also posted decent set of numbers. Revenue was up 9%, PAT was up close to 72%. One more stock, we don't talk about it much, RS Software. Numbers have been bad, and also one key point to note is that the statutory auditors, they have expressed an unqualified opinion on that stock, on the numbers. So that will be a key concern for the investors. Apart from this, the results, that 2 big results that will be coming in, the big boy Ultratech is expected to post its result. On the other hand, NIIT Tech. So keep an eye on these 2 stocks. Apart from the results, one key thing to watch out is that newspaper reports today have been suggesting that JBF Industries, remember the stock has been really volatile for the last 2 to 3 months. Over there is some strategic sale that the reporter is expecting with Indorama Group, either Reliance Industries or the Chatterjee Group. Back to you.
Okay, Naveen, thank you so much for all of that. But as we usher in summer 2074, we take a look at how markets have fared since last Diwali. A special report after this short break. Stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV18. As we enter into summer 2074, summer 2073 has been a good one for the Indian markets. Nigel is here with the key movers. Nigel, you've done all the number crunching for us. Tell us, what are the key highlights?
Well, from last Diwali to this Diwali, yes, it's been a good one. Everyone talks about, being a $2 trillion economy. Well, now the BSE market capitalization as well is more than $2 trillion. In short, in the last 1 year, the total market capitalization that's added is 25 lakh crore. As you said, the Nifty, the Bank Nifty, the Sensex, all of them have had a good run in the last 1 year. Who has participated? The DIIs, they are pumped in close to around $15 billion, but half of that has been, offset because the FIs, they have been selling close to around $8 billion. Developed markets, they have done very, very well. The big boy in there, the mother market, the Dow has given you returns of around 25%, and the other big European markets as well have done quite well. In terms of the emerging markets, well, India, we have performed quite well if you compare us with the other emerging markets as well. So we are in there with a gain of around 18%. Only the Brazilian index has done well. But let's come back home. In terms of indices that have done very, very well, the metal index, that's been on fire, giving you returns of around 40%. Even the realty index has given you returns of roughly around 40%. What's really, been a bit of an underperformer? Then the pharma index, not too well. That's given you a cut of close to around 15% approximately. But let's focus on those metal and commodity-related stocks. Take a look at Hindalco, Tata Steel, HPCL as well as GAIL. All of them have given you big, big returns. And sticking with the gainers then, some of those heavyweight stocks, they need to do well if the Nifty has to move up. Reliance Industries, that's given you a return of around 66% approximately, and the HDFC twins as well in there with good returns. The financial space needs to participate when the Nifty needs to move higher, and the new entrant, Bajaj Finance into the Nifty, that's done very, very well. Yes Bank as well has given you returns of around 45%, and good boy in there, Kotak Mahindra Bank, in fact, has given you returns of more than 30%. But the real money has been made in, that those are some of the losers actually. The pharma stocks, they haven't done very, very well. In fact, they're down close to around 30% approximately. But as I said, the big money has been made in the broader markets. So the small cap and the mid cap index should come up for you. Both of them have given you returns of around 18 to around 25%. And you really required, to have a lot of conviction in there, because some of those biggest gainers have been the highest beta in terms of moves. Just take a look at India Bulls Real Estate, JSPL, Escorts. All of them have close to have doubled your money in the last 1 year. But everything really has not been hunky-dory, because some of those stocks have taken it on the chin. Reliance Communications, Glenmark, Ajanta Pharma, all of them sitting with sharp cuts in the last 1 year. The IPO theme as well did play out in the last 1 year. One would have thought, well, I've got allocated 50 shares in the DMart, IPO that took place, the issue that took place. Well, someone would have sold it when it doubled, when the money doubled. You put 15,000, you got it with a gain of 15,000. But if you held it till date, you would be making close to around 50,000 rupees. So those are the gains that we're seeing on some of those stocks that got listed in the last 1 year. But the real patakas have been, the ones from the broader markets. India Bulls Ventures, that's given returns of around 1,000%. HEG, Goa Carbon, big returns. And Avanti Feed, one would have thought it's already done its big run. Well, in the last 1 year, it's given you returns of close to around 350%. The big question is, remember, gold in the last 1 year hasn't moved. Well, the Sensex has given you returns of close to around 4,700 points. Where do we go from here? Only time will tell. But clearly, in the broader markets, we should see the party continuing. Back to you.
Okay, Nigel, so the party might just continue in the mid-cap space. Thank you so much for getting us all that information. But coming up ahead, two big earnings post-market hours yesterday. Axis Bank and Wipro both disappoint the street. More details after this short break.
Well, let's get straight to earnings reactions then. And Wipro from the IT pack will be reported its numbers. It looked like a bit of a disappointment, Anisha.
Well, yes, a tad bit of weakness coming in the numbers, both in terms of Q2 as well as the guidance of Q3 is a bit disappointing. Now, in terms of the positives, first up, the margins really were healthy. The IT margin came in at around 17.3% versus our expectation of around 16.6%. So, an expansion coming in there, and the management says that is because of the efficiencies and the reshuffling that happened in the India business as well as the improvement in the utilization. So, an operational efficiency coming in there along with the currency tailwind. In terms of the negatives, however, and why I call the numbers weak is because the constant currency growth has just come in at around 0.3%. Now, remember, the range that the management had given was minus 0.5 to 1.5. This has come towards the lower end of that particular guidance, and this is much less than what the street was expecting at around 1%. In terms of the dollar revenue, bang in line with expectations at around $2,013 million. Profit after tax also in line with this time around as well at a healthy pace. Now they contributed around 24% of the total IT revenues. Healthcare business has been a pain point for them. That has not been doing well for them for the last 2-3 quarters. The management has been alluding to the pain point there. There we have seen a decline of 5% come in this time as well. Energy, last 2 quarters saw a run rate of around 3%. This time around as well grew at around 2.8%. BFSI, surprisingly, which has been a pain point for the rest of the IT peers, has been doing well for Wipro, and that is why this time around as well we see a growth of around 5% there. Manufacturing up around 3%. The utilization, as I was saying, is up around 90 basis points, and that is taken well. The European business as well grew by around 6%, and even if you look at the US business, that did not see a decline. Just to tell you what brokerages make out of it, it is a bit of mixed reaction. There are people who have raised their target prices as well on back of better margins, but CLSA, for example, has cut their target now to 315. They said that Q2 performance was in line, Q3 guidance was weak, and they expect only the recovery to happen in earnings growth only in FY19. So let's see how the stock reacts today, because the reaction is a bit mixed, Nigel.
Absolutely. Thanks so much for that, Anisha. Well, Kritika Saxena caught up with the Wipro management and began by asking them about the rationale behind the muted guidance. Let's take a listen to the slice of that conversation.
As you know, Q3 has the seasonality of furloughs, which we have built into our guidance. There is also a larger set of leaves that employee takes, and there's certain billing loss happens due to that, both in India due to the festival season as well as in the Western markets due to Thanksgiving and Christmas, and that has been built into our guidance. Also, there is a level of uncertainty in the healthcare segment that continues to prevail because of our leadership in the US healthcare market and a significant share of the Affordable Care Act member servicing and member origination. Right now is the open enrollment period, and we will know better, but we have factored that into the guidance as well. Otherwise, we feel quite a good tailwind coming from most of our other verticals as well as our geographies.
Jatin, coming to you, this time around you had factored in 2 months of the salary hike. So can you give me a breakup of the margin expansion that you have been able to get?
So Kritika, overall it was a very satisfactory performance. As you rightly mentioned, we went in with a headwind of 2 months salary increase, but we executed well. We executed on all angles. Our utilization improved. We got tailwind of slightly improved realization. We did a stellar job on automation and related productivity gains during the course of the quarter. All in all, we came out with a solid operational execution and therefore delivered approximately 50 basis points higher operating margin for Q2. So I would say it's all of that is operational improvement and execution.
So the 50 basis points that you're talking about is via operational improvement. Is that because of utilization increase as well?
Yes, it does include the utilization, which has improved 72 to 72.9, and if you see our trajectory, that is among the best utilization that we have had over last 6 or 8 quarters.
Okay, so from one earning to another, Axis Bank reported a weak set of numbers for the second quarter. The big disappointment came from NPAs, which have seen a sharp surge during the quarter. Abhishek Kothari is here with more. Abhishek, good morning. Tell us what went wrong with the numbers this time.
Good morning, Anisha. The non-watchlist slippage is actually causing a worry for Axis Bank. Now, overall slippages were at 8,936 crores. That compares to about 3,500 crore in the previous quarter. So that's a substantial jump, while slippages from watchlist were close to 2,431 crore versus 800 odd crores in the previous quarter. But the non-watchlist slippage was at 6,505 crore, and that compares to 2,722 crore in the previous quarter. What led to the rise in this non-watchlist slippage is divergence. Now, the bank reported divergence, which was on FY17 basis. So the gross NPA divergence is about 1.5% of the then loan book, which constitutes about 5,600 odd crores, and the net NPA divergence is at 2.31%, or which constitutes 8,630 odd crores. So there is a provision difference which is there of about 1,320 odd crores. So this divergence led to spike in non-watchlist gross NPA. So if you look at the non-watchlist slippages, it has been increasing over the last 6 quarters, right from Q1 FY17 to being less than 1,000 crore to now being at 6,500 odd crores. Overall watchlist actually reduced as slippages came in, so now it stands at about 1.74% of the book. Gross NPA on a sequential basis increased by 24.5%, and gross NPA as a percentage stood at 5.9% versus 5.03% quarter on quarter. If you look at one interesting data that I have found out, the NII growth has been under pressure as and when the non-watchlist slippages have been rising. Profitability has come under pressure, and therefore return ratios, that is ROA, has been under pressure. You look at brokerages, across brokerages, after the management's guidance of increasing credit costs, brokerages have cut their FY18 EPS estimate anywhere between 25 to 35% and FY19 by 10 to 15%. Back to you.
Okay, Abhishek, thank you so much for that. So Axis Bank will be one of the stocks to really keep an eye out in today's trade. But on that note, we take a short break. Up ahead, we talk about Ultratech earnings that are due later today. We get you the key expectations. Stay tuned.
Here's wishing viewers of CNBC TV18 a fabulous Diwali, and I have reasons to believe that this will be a year that you will look back and say, wow, it is a great year for investments, and I hope if you take the investment approach, you make a lot of money. All the very best.
Video game hai kya? Investing is a serious business, requiring years of research.
Narnolia.
सब लोग स्माइल। अरे ये सत्तू कहाँ है?
मीठा खाने को मना किया तो अंदर लड्डू बन के बैठे हैं। ये देखिए।
ओह, लड्डू जी टीवी देख रहे हैं। आ जाओ। ये हो गया कनेक्ट। ये देखिए। ओहो, हेलमेट पहने हुए हैं भाई साहब। कि भाई साहब पिछली दिवाली में तो खूब रॉकेट चला रहे थे, इस बार क्या फुस?
But Mama is looking so pretty.
Yeah.
4K Ultra HD है, इसमें तो मैं भी हैंडसम लग सकता हूँ।
यार तू तो हैंडसम है ही, एकदम हैंडसम है। त्योहारों का मजा दुगना हो जाता है जब खुशियों का फैमिली शो ऑन हो जाता है। तो लाइट लाइए, खुशियाँ ऑन कीजिए।
Zodiac, finest quality clothing.
Get deep insights on doing business in India. EY presents Eye on India, your source for insights on key issues impacting the world of business. Watch this week's episode at these times only on CNBC TV18.
Presented by EY, building a better working world.
I prefer breathing easy than being stiff and cuffed. So I choose the finest linen fabrics that match my personality. Linen Club, made for the different.
लंदन से कब लौटोगे पापा?
10 days.
10 days?
Actually, it is 14 days.
14?
हम सब
क्या?
चलें?
ये खुशियाँ बस यही तो है एवररेडी एलईडी से ज्यादा ब्राइट एवररेडी एलईडीज द ब्राइटेस्ट
चमक 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 Biba Girls, Indian wear for ages 2 to 15.
Welcome back. You're watching Power Breakfast on CNBC TV18. Let's now get on to some earnings expected today. Cement major Ultratech will be reporting its Q2 numbers today. Nigel, what are the street expectations? What are the key numbers to watch out for?
Well, you know, Anisha, the street will be looking forward to these numbers. And you need to keep in mind, there are a couple of aspects before I get you to the numbers. Remember, this time around, the numbers will involve the consolidation of the JP Cement assets. And remember, as we already know, the JP Associates consolidated, the cement assets consolidation will be EPS dilutive for the entire this year and some part of next year as well. But let's focus on the standalone numbers. Remember, this is the domestic operations we're looking at, and they include the JP Cement, the acquisition. Top line growth of around 4%. Why is that? Remember, we're expecting the sales volumes to come in higher by around 11% approximately. We are working with a number of around 12.4 million tons. That compares with around 11.2 million tons. The entire growth, though, that will come in from the JP Associates acquisition. So, on a like-to-like basis, Ultratech Cement's volumes would have been more or less flattish. Now, the key assumption here is that the JP Associates acquisition, that's the cement plants, will function at around 30%. Remember, in the first quarter, it was functioning at around 15%. So, the street is breaking for a bit of an improvement in terms of the JP Cement capacity utilization. Around 1.5 million tons, 1.3 million tons approximately is what we should get in from JP Cements. Operating profit, though, will take a hit. It should come in down by around 2%. Even in terms of margins, it will take a hit of close to around 100 basis points. Why is that? Consolidation of the JP Associates cement plants, that's what hits them. Why? Because realizations will be a tad bit lower. Profitability of the JP Cements assets, it's sub 500 rupees in comparison to Ultratech Cement that does more than 1,000 rupees. So on a blended basis, the EBITDA per ton will take a bit of a knock. And remember, as has been seen, higher freight cost as well will hit them. They use a good amount of pet coke, and those prices have spiked up as well. The profit number as well does take a hit, Anisha, of close to around 38 to around 39%. That's because of a weaker operational performance, and also we'll have higher interest cost and higher depreciation cost on a year-on-year basis owing to the acquisition of JP Cement plants.
Okay, so the acquisition of JP Cement plant will come into play and probably a bit of weak as far as operations is concerned. But as Diwali has arrived, but the festival sales across metros are showing a dull picture. How is the demand picture in Hyderabad's iconic Churi and Lard Bazaar? Nitya Balakrishnan gives us a ground report regarding the same.
You love what's happening here at the Chudi and Lard Bazaar in Hyderabad. Now, these are one-of-a-kind markets in the country simply because, first, it's one of the 4 streets that actually leads up to the iconic Char Minar of Hyderabad. And more importantly, as the name suggests, why these markets are famous is this specific specialty here is bangles made out of lard or lacquer, and of course then inlaid with very precious stones and the ambitious Hyderabadi pearl. So this is the place to go and shop at any given point here in Hyderabad. So what it's looking like just ahead of the festive season, let's find out.
Now I asked how much cost of this, so he's saying double and triple. We middle class people, we can't buy all that. In our budget, there is a little less crowd because last time also I was here on a Saturday. It was very crowded. I couldn't walk here. But then today, as you can see, no, I don't think there's much crowd.
Every year in the months leading up to Dussehra and Diwali, a pedestrian cannot even squeeze through the narrow lanes here at Chudi Bazaar. However, this year, prices have increased owing to GST, and this has seen a clear impact on demand. While those shopping for special occasions and significant moments still do not seem to mind the increase in their bills, Shopkeepers believe that the sheer volume has dropped significantly this festive season.
जीएसटी से तो नुकसान ही हुआ है, अभी तक तो कुछ फ़ायदा तो नज़र नहीं आया है इस पर। जीएसटी की वजह से जो है बहुत सारे प्रॉब्लम्स है। कस्टमर जो लास्ट ईयर जो कस्टमर था जितना क्राउड था बाज़ार में वो बिल्कुल नहीं है ये साल।
अभी थोड़ा बिल बनता है, एक आदमी खाया अब 500 का बिल बना उसको 40-50 रुपया बढ़ जाता है। तो बहुत जीएसटी से लोग परेशान हैं, मतलब लोग महसूस करते हैं ये गवर्नमेंट हमारे ऊपर बोझा कर दिया।
Diwali is often referred to as the festival of lights and color. But the cheer this time around seems to be slightly muted here at the Chudi Bazaar in Hyderabad.
Well, we also travel to silk sari stores in Chennai. Our very own CNBC TV18's Jude Sanet has this report on whether China's silk sari market has bounced back for the festivities.
I'm in Chennai's retail capital, T Nagar, home to at least 10 silk sari brands whose showrooms together account for 8,000 crore rupees every year. Now, in the aftermath of the GST, there has been some sluggishness in silk sari sales thanks to that 5% tax on all handloom products. But traders tell me this Diwali has brought in some much needed festive cheer for the segment. Chennai's overcast skies may have dampened the festive mood just a bit, but that hasn't stopped shoppers from a last-minute dash to these showrooms too much.
With the flagship store, we've seen a 10% increase. Across Chennai, it's actually had an increase. So is the case in Delhi as well. Some of the other places, it's a little bit. There is a pickup, but not as the case in Delhi as well. Some of the other places, it's a little bit. There is a pickup, but not as much as what you would expect at a typical festive season.
A ground check among Chennai's sari brands reveals that festive sales in the city are up 10 to 15% this year. Footfalls have averaged 300 per day in smaller stores and around 2,000 per day at bigger showrooms. And people have spent between 25 and 30 lakh rupees per day. So what's in vogue this season? Soft silks, bright hues, and custom designs. While most players in the market claim that footfalls have matched up to previous years, some niche brands say they're witnessing tighter shopping budgets.
Even families that were gifting or were buying for themselves, they maybe thought, let's scatter our purchases over a spread time. Let's not, kind of indulge too much.
But the one visible change this year, cashless transactions. Even in organized retail stores, card payments, which only accounted for 35% of all transactions pre-demonetization, now account for 75% of the transactions in some stores.
Since February of this year, it's come down to 65% and it is stable at that position. So there has been an increase of almost 20% since introduction demonetization.
So the verdict is fairly simple. GST-related sluggishness aside, the silk retail business is back on its feet in time for the festive season, but with slightly tighter wallets. In Chennai, this is Jude Sanet.
Okay, on that note, let's slip into a short break. Up next, we'll get you a check on the cues to watch in the futures and options space. Stay tuned. Welcome back. You're watching Power Breakfast on CNBC TV18. Well, let's head to the commodities corner where Manisha Gupta joins us with all the update of what's happening in the commodity space. Manisha, Nigel was earlier telling us that gold actually hasn't moved over the last 1 year. What's happening there? The Diwali, maybe the next year would be better?
Well, we hope so, yes. And you're right. In the Indian market, the gold hasn't moved at all. It actually is quite flat. But that's because of the rupee appreciation as well. Because when you look at the gold in US dollar, in euro, in pound sterling, in Turkish lira, many of these currencies have seen a very strong appreciation in gold as a return, but not Indian markets because of the rupee appreciation. So yes, we're quite flat. But remember, last year we gained 18% for gold, 24% for silver as well. And there are strong estimates of returns coming in over the next 1 year, given the kind of global cues that we are sitting in. At this point in time, of course, we're trading quite on the negative for the week, for the day as well, for the gold prices. But the signals are good. You are looking at strong demand estimates from China and India. As of now, it also is about the strength in US dollar that's weighing onto the prices. But the geopolitical concerns is what you need to keep an eye on. And that is exactly what has been keeping the crude oil prices on the higher side. So we are holding 58 for the Brent prices. Markets are awaiting the US weekly inventory data as well. And there is an expectation that you will see yet another week of withdrawal of crude inventories. And that is what is supporting the prices here. It has been a very good year, though, for the metal prices. The industrial metal prices are trading on the higher side. So you have zinc, which is very close to its 10-year highs. Copper prices trading at a 3-year highs as well. You have the steel prices, which are up more than 45% in this year. So this really has been the industrial metals year by far.
Okay, all right, Manisha, thanks so much for that. But let's hop across to Mangalam Malu. He's standing by. He's going to tell us what's going on in the derivatives market. Hey, Mangalam.
Well, Nigel, you know, yesterday the FIs went shopping again in index futures while they sold in the cash market a near 260 crore worth purchase in index futures. So what this has done is taken the FII long exposure to 64%, and this compares to 56%, which was at the start of this series. So incrementally, they have been adding long positions in index futures. Yesterday, there was a buy figure of close to 927 crores in index options. The internals of that could be a little affected by the fact that the Bank Nifty weekly options expiry this time is on a Wednesday instead of a Thursday, because tomorrow is the Mohra trading. In terms of the Nifty, a couple of strikes were fairly active. The 10,250 put, that one added some shares for a premium of close to 62 rupees, making one believe that there is support at least at the 10,200 mark. Even the 10,200 put, that one added some shares in open interest for a premium of 50 rupees. 10,150 could also be an important support. The 10,600 call, that one caught my eye, added close to around 3 lakh shares in open interest for a premium of 2.5 rupees. Some punts perhaps being taken there, given that even if the Nifty goes up by about 100 points, these guys would double their money. The Nifty Bank weekly options expiry, a couple of strikes fairly active. 24,900, 24,800 and 25,000 calls have been written. So an up move would perhaps take some, give them some short covering, but at the lower end, 24,500 as well as 24,400 puts have been fairly active. Long seen on Shrey Infra and NBCC, short seen on Z, which was underperforming yesterday. And ahead of results, we saw a lot of shorts on Axis Bank.
Okay, thanks so much for that, Mangalam. Well, that's it from me and Anisha and the entire Bar Breakfast team. We'll see you in Sambat 2074.